You see the market in trends, I see the market in models, and that's exactly what gives me precision. In this video, I'll give you a full degree on and complete trading plan just around market maker models in only 9 minutes. A market maker model isn't just another pattern or another ICT concept, it's a blueprint for how price moves. Price moves to do one thing, provide entry opportunities to all participants of the market. To enter, these participants place orders at price levels just like us, but to us traders, clumps of these resting orders are called liquidity. The ones who actually control and shape short-term price movement are the market makers, not people sitting in suits, but large algorithms and institutions that provide liquidity, fill big orders, and guide price towards areas with the most resting orders to fill price efficiently. They don't predict where price will go, they create the moves by targeting where the most traders are exposed. So what do? They engineer traps, draw in retail, take the other side, and reverse the move. That's what the market maker model captures. It's a repeatable blueprint showing how price generates, manipulates, and exploits liquidity before making its true move. It's not a secret, it's what billion-dollar firms have figured out the market must do to keep moving. So without further ado, I'm gonna show you guys the exact characteristics of a market maker model, how we can identify them on the chart, and what the best ones all have in common. Let's hop on them charts. This is a textbook market maker model right here, and what you guys might see is just a retracement into a fair value gap and to push higher. What I see is a mechanical model right here, and I'm gonna show you guys the exact characteristics of this model, and then we'll hop into identifying them on the chart. So zooming out, we must have higher time frame bullish order flow if we wanna take a bullish model, right? So we have to have some kind of higher time frame trend showing us that we're clearly looking very bullish. We have to have some kind of PD array. We can make this a previous low. This can be any kind of low. This could be the low that here that we're sweeping intra-trend, right? Now this could also be an order block right here that I have marked out. Pretend this is a fair value gap. We need to see this start to generate liquidity and push lower. This is not where we trade. We don't take shorts up here because this pullback is never guaranteed. There's no reason to take a short here because this pullback is never guaranteed. We don't know if we're gonna go target this or these 10 fair value gaps that got left below us. We don't know if price is gonna go target them now. So what we wait for is the pullback in, and note this, complete stacked highs generated liquidity. If a fair value gap gets placed into the leg, it gets tapped back into and pushes lower, right? So any fair value gaps here get mitigated, or all or most of them get mitigated. By this point, we start to slow down and we start to potentially get some people longing at this fair value gap with a tight stop, right? At this point, the market manipulates them with a manipulation leg. We see an outsized move in the opposite direction that we want to see price pull towards. This right here becomes your manipulation leg. From there, we see displacement through that, creating a change in the state or a market structure shift. And then from there, we retrace, use that change in the state as an order block or the fair value gap, or we tap all the way back into that inverse fair value gap. And from there, we can expect to see low resistant run or efficient price action all the way back to that buy side liquidity. Note how this is high resistant move. This is generated liquidity. And then from here, we have a low resistant move that hunts liquidity. This is a market maker model, and these appear on every single time frame. Now I'm gonna go ahead and show you guys a couple examples. So right now, imprint this photo in your mind. All right, so zooming back out to the daily, what do we have here? This kind of looks a little bit like a market maker model. Even looking right here, this looks just like a market maker model. We have generated liquidity, and we have a move to the upside. Right here, generated liquidity, all the fair value gaps that get left in this leg, except these top ones, get tapped back into, and then from there, we displace higher, put in the manipulation leg, displace out, pull back to it, and then go, right? This is a market maker model. Let's go ahead and find another example. Maybe we go to a lower time frame. So let's pull a little bit more recent, and let's look for a market maker. Oh, wait, hold up. We have generated liquidity, outsized move in one direction, manipulation leg, displacement through that, change in the state, very little pullback here just on this candle, and then we continue to these lows. That's like a market maker model to me. Let's look at something a little bit more recent here. This is even a cleaner model right here. We have tons of generated liquidity right here, almost looking like trend line liquidity, right? Up here, we can draw a trend line from here to here. Stuff looks very clean. There's a ton of stacked lows, right? We manipulate higher, we displace lower to that draw. This was FOMC. This is what news does. It completes that model. It goes to the already existing draw on liquidity. Here on GBP USD, we have another really interesting example. If we look, what we do is we sweep a previous weekly high over here. Now we have generated liquidity resting right here, showing trend line liquidity. Where's our sell side level that we can potentially take this to? Right here, right? Let's look. The model displaces through that low. After having that manipulation leg, it displaces through it, it pulls back to fair value gaps to equilibrium with that leg, and then it continues lower to that drawn liquidity. When we have a fair value gap right here, goes ahead and gets tapped into, and then that daily low gets taken, that shows us there is a model here. So let's zoom into maybe a 5 minute, and let's look what we can get over here to show that internal model, right? So look, beautiful. Right when price pushes into this level, right around NY open for me, we see that tap in. This becomes our manipulation leg right here. Displacement to that previous low, pull back to equilibrium, pull back to that change in the state level right here, and one of the most efficient dumps there's ever been in price action. Forex pairs do this kind of stuff. They set up crazy perfect moves like this that we only take if we're able to watch. Look, complete perfect generated liquidity. This is a beautiful model. This is something I would definitely trade if I were you. This visual will amplify our understanding. After tapping to a daily point of interest somewhere around here, the market puts in a high, pushes lower, does not displace through this level, and instead it starts generating liquidity, starts generating equal lows right here, goes ahead, displaces higher, takes this level sitting right about here, so this becomes our internal stop rate, right? Now looking all the way up here, zoomed in onto the 1 minute, we see an AMD model play out. This looks like accumulation. However, ES goes ahead and it takes this high right here, showing that we have manipulation. We go ahead, displace that, change the state, no pullback, and we end up creating a super efficient movement to the downside to all this generated liquidity right here. Equal lows get tapped. Now, when we see this level right here get displaced through, what does that now show us? That maybe shows us that we have a 15-minute change of the state. So we see 15-minute change of the state, pull back to fair value gap. Once this happens, treat this visual right now like a 1 minute chart. Where does that validate us towards? It validates us to this low, this generated liquidity, this fair value gap, right? So now when we see price pull to that level and displace through it, what does that give us? A 1 hour change in the state. So let's look right here. Displacement through this level validates us to where? Zooming out, treating this like a 1 hour chart. What can this validate us towards? Potentially maybe say this low right here, right? So we take our low hanging fruit, right? So let's watch this, see how this develops. Okay, look, right there, low taken. Zooming out, where does this validate us towards? Well, this is a 4 hour change of the state. So maybe after this change, the state gets tapped, fair value gap gets tapped, we can expect to maybe go to this low and maybe tap into that weekly fair value gap that's sitting right about there. Let's watch. Price goes ahead, pushes a little bit higher, goes ahead and takes that level, right? After taking this level, what can we expect price to do? Well, we have a higher time frame bullish trend, and we have displacement through, we have a ton of generated liquidity as well on the way down, right? Analyze that generated liquidity, stacked high sitting there. Now we can expect to see a manipulation, displacement higher, pull back. Now we can look to see upside. Absolutely beautiful, taking that previous high, and this is how the market truly moves. Understand this and your understanding will absolutely explode. All right, so let me go ahead and show you guys an advanced breakdown that will make these models so high probability if you implement everything in which I'm about to show you. Say price has a higher time frame draw on liquidity, and we expect price to, since it's been acting bearish, we expect price to go ahead and take this external level, right? So we see price moving efficiently to the downside, then we see an abrupt turnaround, right? We see slow, price action higher, generating liquidity, placing in some equal levels, right? We come back to this fair value gap, maybe take an internal high like this, tap into some kind of equilibrium of this range, right? Now look, this is all generated liquidity. We need to then see a manipulation leg, take that previous high, displacement through the level, pull back, and then we can see efficient price action out. And we can see that internal high get hit and then the external draw get hit eventually. This is your market maker model. What makes this so high probability? Well, there's a couple things. We need to have the high time frame confluence. So that would be the fair value gap, but there might be something more important here. Let's zoom out. When we see this downtrend, I told you guys I don't see the market in trends, I see the market in models. So this most likely has a bigger time frame model that's generating liquidity, pushing higher, tapping into some kind of higher time frame fair value gap or PD array, then going ahead, taking that high, displacing through the level, and then go ahead and creating that model to the downside, right? So when we start to see that efficient movement to the downside, we create a fair value gap, we come back in and do this. Now look, what I just showed you right here, this is present on a smaller time frame in every single one of these. Every single retracement has one of these, right? So the best opportunity here is to hop in this top one and ride it all the way to the bottom. So look at this. The higher time frame confluence is the most important, or else it's random. The next most important is that this has to be generated liquidity. This cannot be complete imbalance price action moving high like this and then all of a sudden manipulating at the high. You cannot see this play out because at a certain point, this could potentially just be a rebalance to this bigger inefficiency that's sitting right about here, right? That price could then go ahead, push higher and stop you out. You need to have generated liquidity like we have right here. The next most important thing, we need to see that manipulation leg put in. And so how do you identify the manipulation leg? Well, identifying it is easy. It's simply the leg that gets displaced through. I don't have to know at this point that this is going to be our manipulation leg. I just need to wait for price to go ahead and displace through the level. Then once it's displaced through, I know that this is our manipulation leg, right? I need to see the pullback. Now, where I like to enter, there's a couple different ways to enter this, right? After we see that displacement through, this becomes our entry. You can enter on the change of the state because that acts as an order block, right? You can also enter on the fair value gap that might get opened up in this leg. You can also enter on the inverse fair value gap that was present in the manipulation leg. Another way to enter is to enter on equilibrium of this range. And this, in my opinion, is the least frequency that gets tapped, but it is the most sniper entry. equilibrium sometimes will get tapped, and right out of that, you just see complete displacement to the downside. That's where you enter, and then from there, you can expect that efficient movement to the downside. And on this move down, you can expect to see order blocks hold. So this order block that gets put in should hold, this one should hold, and then we should continue lower, right? And if we make imbalances, those will hold instead of the order blocks, right? Now, another thing that could happen here is we could see price do something like this, where it starts to act a little inefficient here. It goes up, maybe takes the level, maybe doesn't, and then it'll take this internal level. Once this gets taken, there is no reason for price to push higher at all. We can expect efficient movement lower, right? And that is why right here on that internal sweep, you can make your entry right there. You can enter there. That is called a turtle soup entry, right? So drawing this out, you put your turtle soup right here, and your entry would be right at that sweep of that level. So if this goes ahead and happens, and you enter there, and you see something like this, where we take that level and we just continue higher, then the model wasn't ready yet. We can expect to maybe pull to a higher time frame level, maybe another fair value gap, or maybe these order blocks price want to pull towards, right? Price can then go ahead and do something like this. Go ahead, push lower off of that, right? That's the same thing. You can get faked out if you're too zoomed in these models. Next day, I'm going to go ahead and show you guys my complete trading plan, and I'm going to go ahead and show you an example of a trade that played out this week that was just perfect with that plan. For my trading plan to need to happen, say this will be a 15-minute or a 5-minute time frame. I need to see generated liquidity, complete generated liquidity up to a certain point of interest, right? Say it's a fair value gap, say it's a previous high. We tap that level, right? And from there, I want to see price tap into it once. Go ahead, maybe start a little bit of move down, get some people in early shorts, right? Manipulate that, displace to that level, right? Now, this is a 15-minute or a 5-minute time frame. I don't want to execute on this time frame because for me, the risk is too big and the R is not great enough and it's not very precise. So instead, what I do is it's a 15-minute time frame, I'll zoom into a 1-minute or a 30-second. If it's a 5-minute time frame, I'll zoom into a 30-second or a 15-second, just depending on whatever one is clearer, right? From here, once we get that change in the state right here and that displacement through the level, we want to zoom in. So I'll zoom into the 30-second and the 15-second, whatever is the clearest for this model, right? Then we'll typically see a little bit of generated liquidity get made on the way to tapping that level, right? So now when this level gets tapped, I want to see it get tapped. I want to see manipulation leg, change the state with displacement, pull back, and efficient price action lower. Now, this is the fractal model that we were looking at earlier. It's the exact same thing. That generated liquidity, hitting that point of interest, that change the state, displacement, the efficient move to the downside. That's where I want to do it. So now let's zoom back out. We have that 15-minute model like I was showing you guys earlier with our drawn liquidity being all the way down here. Now, I take my trade at this point. This is where I enter. I enter right after we get that displacement and we tap that change of the state. My first take profit is here. I'm not going for a huge home run. I'm taking this first take profit because you can live on that. What I want to be doing here to take the rest of my partials is I want to be marking out standard deviation. We mark this on the manipulation leg. So your manipulation leg is right here and right here. So we would go ahead, put that right there. -2 is where we want to see align with the end of our model, right? So you can either take your first partial here at the low-hanging fruit of this internal model, or you can take it at -2. From there, I want to be looking for where these align, right? So right here, the biggest aligning ones would be in between 2.5 and 3.5 and 1, right? So I'd most likely place this second take profit right at 1. From there, I want to leave runners to that standard deviation of this internal model or whichever the other aligned ones is. And if the external model drawn liquidity is much closer, maybe something like this, then I'll just go ahead and leave runners for that, right? But in this situation where we're calling a crazy top to this entire move, it is more likely for the market to go ahead and do something like I showed earlier, like this, right? This is my exact trading plan. I'm gonna go ahead and run through a trade that I took earlier this week on Thursday that was exactly this. All right, so zooming in, we're about to go check out FOMC day's price action, right? So this was the range that we had developed in this day. So at this day, we had developed this beautiful range right here, right? So drawing in equilibrium, we're perfectly at equilibrium of this bigger time frame range right here, right? So pulling into the whole entire morning, we have just generated liquidity right here until FOMC, where we go ahead and we tap that level, right? So our sell side goes about right here, and FOMC comes in, taps for value gaps, taps order blocks, taps equilibrium. We can then zoom in and we can look for where price wants to react off of, potentially see where we can see our model play out, right? Zooming into this is beautiful. I mean, we have that level get hit right at 230. We go ahead and make the change of the state right here, pull back to this fair value gap and the inverse fair value gap aligning. So that's a BPR right there for y'all. Now, zooming in, where I take my entry, 15-second was the clearest here. We just wait for the exact same thing, bro. We have generated liquidity all the way throughout this, right? Boom, boom, beautiful, right? Now we go ahead and we see change of the state right here, inverse fair value gap in this leg, new fair value gap gets opened up. We take that change of the state entry, tap it at the change of the state over here, stop at this high, target this internal low, take a nice 2.3 R. Now we go ahead and mark out standard deviations. This is our first standard deviation. The next standard deviation would be on that 5-minute leg. So our next standard deviation drawing goes right here. And that shows us potentially where we can see price bottom out. So if we look, it calls it perfectly, right? We want to be taking this trade to where we are confident that price will draw towards, right? So if we look, we have 1 and -4 aligned right here. This could be your second take profit if you're confident that FOMC will dump, right? From there, you can take this little external draw right here, and then maybe even leave big boy runners all the way to this -2 level and check out that RR. 9.07. This is what overlapping models can do, because look, you can take this exact same trade on this time frame and get an OKR 2, 3. Okay, it looks good. Or you can scale it and you can get that fractal precise entry. This has been Market Maker Models for Dummies. If you guys have any questions, go ahead, drop them in the comments. I'll be the first to answer. Thank you all for listening, and I hope you guys can learn something today and up your trading from it. I'm gonna let y'all go. Have a great one, boys. Peace out.